Hello everyone, welcome to another Fratarcangeli Friday Market Update. We're doing this one on a Wednesday as we enter into Thanksgiving tomorrow with many of you enjoying your families together and hopefully having a wonderful day. I thought I'd come to you and give you a brief update on what's transpired in the last week since I saw you all on our more broad-based conversation with Bob Carey that talked about this AI and technology consolidation that the market was going through. And here we sit today, just a few days later, about a week to be exact, and the markets have recovered quite nicely. We've seen the market recover not quite to its previous highs as a broad scale, but more towards where we left off relative to our previous highs. So we're heading in that direction. The Fed is a very critical aspect of this, as we've been hearing things in regards to the December rate decline that we've been counting on now for quite some time. And now that 20% probability has been risen over the last week to 80% probability. And I think that has weighed heavily on the market and some reconsideration of valuations. But the reality of the situation is it's healthy. The fact that the market retraces and retrenches, I like to use the example that you've heard me use in the past. If you're building a skyscraper and you don't test each floor before you build the next floor, you can collapse very quickly if that is not sturdy enough. And I believe that's what's happening today. We're just checking ourselves as it relates to this tech trade, this AI momentum that we've seen. And there was an article recently in the New York Times that said 493 companies of the S&P 500 averaged below 7% year to date, while the whole S&P combined of 500 companies were up over 12%, which tells you it's a concentrated move in the market really for the last several years, but definitely this year. And you have to question if these 7 companies referred to as the Magnificent Seven are really what they appear to be. Having worked in the industry going back to the mid-90s, watching the dot-com bubble occur, I can tell you this is healthy. I don't believe that this AI trade is, some type of a smoke and mirror. I think it's legitimate, but there's always going to be competition, and there's always going to be a reason for us to recheck to make sure the leaders that are building the infrastructure, whether it be in technology, energy, with data centers or other, is consistently going to move forward if there's competition. I believe this is healthy. I do think that there's much more upside to this market over the next several quarters, if not years. And I believe retrenching will be a part of the process. We're entering into an election year next year, which is the midterms, which I believe will bring heightened volatility. But we have to stay focused on the data. We saw some data recently that showed that the consumer price index, which is on the heels of being reported, we saw the PPI numbers come out today, all pointed towards the fact that the economy is continuing to grow, but not at an overheated pace that we had dealt with previously. We're looking at the unemployment numbers. We're looking at the earnings, which we, of course, just completed third quarter earnings that were extremely robust. And we've projected for the fourth quarter to be just as positive as it relates to continued earnings growth. So the data is what we're going to focus on. And we're going to focus on specifically our needs relative to the near term with liquidity, as well as to the objectives on the longest term, which is the legacy, and make sure that we're building strategies that align to our goals, knowing that over time the market will continue to expand with contractions along the way. And we'll continue to leverage every resource we have to monitor these things. And so know that the market contraction we dealt with, which was causing the fear index to spike and confidence to dwindle, has now reversed a little bit, and we're seeing some signs that this may be coming to an end. And I do believe there's better upside to come in the near term and as well next year with volatility along the path. And just know that these are healthy times and we will not react. We will not get emotional. And on that note, I'd like to wish everybody a very healthy and happy Thanksgiving season and take a moment to thank you. And I'm certainly thankful for my team. I'm thankful for the opportunity to represent many of you. And I'm just thankful for all the things that are happening that we don't focus on a day-to-day basis, including the end of the war potentially in Russia and Ukraine, which we believe appears to be on that next threshold of new good news. And all the people that'll have their families together with them this year, I wish you all the best. And I thank you for the opportunity. And I look forward to seeing you soon. Bye for now.